There's a major update coming from the UK government, and it's something everyone needs to understand clearly, especially because it officially comes into effect on the 22nd of November 2025. HMRC has confirmed that they're rolling out a completely upgraded digital system that changes how financial information is checked, verified, and monitored. This isn't just another small policy tweak, it's one of the biggest shifts in how the UK tracks income, benefits, and financial activity. That's exactly why taxpayers, pensioners, landlords, small business owners, and even people with side income are paying close attention to what's about to happen. What makes this update different from previous ones is how fast and how precise the new system is. HMRC will now be able to compare bank transactions, digital payments, employer reports, and benefit data almost instantly. In the past, mistakes or mismatches could sit unnoticed for months because everything depended on slow manual checks. But from November 2025 onward, even small errors may trigger a quick automated alert. So even if someone believes their finances are fully accurate, the new digital system might still flag something, maybe an old detail that wasn't updated, a forgotten bit of income, or a deposit that doesn't match their tax record. The main idea is simple. HMRC wants complete accuracy, and they're bringing in technology that makes instant cross-checking possible. That means people need to be more careful than ever with the information they provide. This includes how income is reported, how benefits are claimed, and how banking activity lines up with official records. The biggest change happening on the 22nd of November is the activation of a digital compliance network that automatically scans financial data from multiple sources. Banks, employers, payment apps, and government benefit systems will all feed information into one system that checks everything within minutes instead of months. If anything doesn't match, such as a small amount of undeclared income, deposits that don't align with earnings, or side jobs that weren't reported, an alert gets generated. This is why the update is considered one of the largest technological upgrades HMRC has ever introduced. The people most likely to feel the effects first are those who don't have just one simple income source. That means self-employed workers, freelancers, gig economy earners, landlords, and anyone juggling different types of income. Pensioners who receive both state pension and private pension income may also experience earlier checks, especially when their records don't align perfectly between providers and HMRC. Even individuals whose financial situation changed recently, like switching jobs, starting a side gig, or updating benefits, may get flagged sooner because the system is designed to catch mismatches instantly. The key point is that the new system is not just looking for intentional mistakes, but any inconsistency, including accidental ones. The reason behind these changes is that HMRC believes billions of pounds are lost every year due to undeclared income, incorrect benefit claims, and general reporting mistakes. Instead of raising taxes, the government wants to tighten accuracy using digital tools that offer real-time monitoring. As more people move to online banking and digital payment platforms, the government wants tax records to reflect financial activity accurately and immediately. Manual checks are slow and require large teams, so this digital shift is meant to save time, reduce errors, and improve accountability. The new digital monitoring system works by collecting information from banks, employers, payment apps like PayPal, and government agencies. Once all the data is gathered, it automatically compares everything. If your bank deposits don't match the income you reported, the system highlights it. If your benefit claim doesn't match your spending or bank activity, that gets reviewed too. There's less room for small mistakes or outdated information because the system is designed to detect inconsistencies instantly. Transparency is becoming mandatory, and the digital footprint of every financial activity will be more visible than ever. Pensioners and low-income households will also notice more detailed checks. Pensioners with private pensions, savings interest, or mixed income streams may be flagged if something doesn't match HMRC's records. Individuals receiving benefits like universal credit will also face stricter monitoring, since their earnings and spending will be compared automatically in real time. People who do occasional side jobs, cash work, or informal earnings might find these activities flagged if the money ends up in their bank account. Even if someone isn't doing anything wrong, outdated records can still cause unnecessary reviews, so accuracy is everything. Small businesses, freelancers, and sole traders will experience tighter monitoring too. HMRC will automatically compare business bank deposits, invoices, online sales, and income from platforms like Uber, Etsy, or Airbnb. If a business declares one amount but the deposits don't match, the system flags it immediately. VAT records will also be checked more tightly. This means that keeping clean, detailed, digital records is no longer optional, it's essential. If HMRC flags an account, it doesn't automatically mean there's a serious problem. But the person might receive a digital alert, a compliance letter, or a request for additional documents. In some cases, HMRC might adjust the record automatically if the error is obvious. More serious issues could escalate into formal investigations, but most cases can be resolved quickly if the person responds on time and provides the right information. The worst thing someone can do is ignore the notice, because that increases penalties or delays. To avoid problems, everyone is advised to review their financial information before the November 2025 deadline. Make sure all your bank details, income records, benefit information, and employment updates are correct and fully up to date. If you've changed jobs, moved house, opened a new bank account, started a side income, or made any financial changes, updating HMRC early will help you avoid unnecessary flags. Cash deposits are also going to be monitored closely. If someone puts cash into their bank account that doesn't align with their declared income, the system may question it. Payments from digital platforms like PayPal, Uber, Etsy, and Airbnb will be automatically tracked too. Even small amounts earned from informal or side work must be reported to avoid triggering compliance checks. Ignoring HMRC notices or failing to update important information can lead to penalties, delayed refunds, adjusted benefits, or even legal action in serious situations. Because the system works so quickly now, there's less room for errors or slow responses. Keeping everything accurate and transparent is the best way to avoid complications. Overall, the changes coming in November 2025 mark a major shift toward real-time monitoring and digital accuracy for everyone in the UK. Whether you're employed, self-employed, retired, running a business, or claiming benefits, the new system will affect you in some way. Understanding the changes and preparing early is the best way to stay compliant and avoid unnecessary stress down the line.